Okay, Assalamualaikum. Good morning, everybody. Welcome back to our tutorial class. As for today, we are going to continue on exercise for past year question July 2021 for chapter 3. So please refer to question 3 in July 2021 as follow. Alright, so the first thing, you are going to read the question first before we can start answer for the question. Question 3 usually tests you on the syllabus for chapter 3, that is redemption of preference shares, redemption of debenture and also the share buyback. Okay, class. So please refer to the first information in this table. Okay, this information related to company name Baraka Engineering Berhad. So here are the balance, closing balance as at 31st December 2019. You have balance for issued and paid up capital which consists of 2 million unit ordinary shares at 2,500,000 ringgit, followed by 8% preference shares at 4 million ringgit. And then you have balance for reserve that consists of two accounts. One is retained profit 4.2 million, followed by general reserve, okay, 3 million. Lastly, you have also balance for your non-current liability, which consists of 1 million 8% redeemable preference shares at 2 million ringgit. So what happened at the end of 31st December 2020? So this is the new accounting period. As at year end, the following transaction took place. So you have 4 additional information down here. Let us read one by one to identify the type of transaction for each of the information. Okay, additional information number 1. The company decided to redeem 80% of the 8% redeemable preference shares at 2 ringgit each. So you can see you have redeemable preference shares balance as at 31st December 2019, and as at 31st December 2020, the company decided to redeem 80% of the redeemable preference share, meaning out of 1 million balance here, the company will redeem partly. How much? 80%. The company will redeem 80% from the total 1 million. Okay, and the price for each share is 2 ringgit. So let me highlight it. Okay, the important information down here. So you know, you can find the redemption value. You can find out the redemption value. So how to calculate? First, you need to calculate how much shares that you redeem. Okay, so 80% times with 1 million unit. So you will get 800,000 units. And then later on, you times with 2 ringgit. So you will get 1,600,000 ringgit. So this is the redemption value. Next, remember, according to the Companies Act 2016, okay, you must replace the shares that you redeem. There are 3 methods. Okay, you can either redeem by issuing shares, by taking the amount to be replaced from your retained profit account, or by the capital. But for your syllabus, we only learn the first and the second method. Okay, look at additional information number 2. For redemption purposes, the company issued 1 million ordinary shares at 1 ringgit 30 cent per shares to the public in full upon application. The shares were fully subscribed, while the remaining shortage was financed out of profit. So here, you are going to combine method 1 and method 2. So this 1.6 million, okay, will be replaced by selling shares and by out of profit. So transaction 1 and 2 related to what? Related to redemption of redeemable preference share capital. Okay, let us continue to additional information. Number 3, the company made a bonus issue Okay, the keyword here, bonus issue. Out of retained profit on the basis of one new share for every 10 shares held as at 31st December 2019 at RM1.25. So, additional information number 3 related to transaction which we have learned in chapter 2, issuance of bonus share. So you are going to record transaction for bonus share. The amount is not given, but we know, okay, this is the amount of shares held as at 31st December 2019, and we are going to find the bonus issue, the total of bonus issue. So the amount is not given, but you can calculate for the bonus issue where you know that you will get one new share for every 10 shares held. So 1 over 10 times with 2 million unit. And then you will get the answer. Okay. 1 over 10 out of 2 million unit. How much class do you get? Can anyone? Okay. So the amounts later on you will times with the price. How much is the price? Okay. RM1.20 each. And you are going to take the the reserve, okay, for the issuance of bonus share. Meaning that you are going to use your own reserve because bonus issue is not to be charged to the shareholders. Meaning that there will be no cash inflow from the shareholders. Instead, as a company, you have to use your own reserve because the bonus share is to be given for free of charge to the shareholders. So please take note this important information. Last but not least, okay, the last one is we are going to what? To purchase our shares in the open market. Nampak sini? Okay, we are going to purchase our ordinary shares in the open market at RM1.60 and half of the shares. Okay, please be very careful here. Okay, we are going to combine both methods. I'm going to highlight this important information. Okay, where half of the shares repurchased will be kept as treasury shares and the balance will be cancelled immediately. So, transaction number 4 is related to what? To share buyback. Remember, we learned this where the company may buy back its share from the open market to stabilize the share market and also to enhance the price of the share. So, in this case, we are going to use both method, treasury shares and also cancellation method. By how much? Okay, half. And the balance will be taken as cancellation method. Okay, you are required to prepare the journal entry. So, let's prepare the journal entries as per required. So, how to prepare journal entry? So, basically, class, we have how many transactions to be recorded? 3, 3. Number 1 is redemption of redeemable preference share. Number 2, transaction related to bonus share. And number 3, transaction related to share buyback. So we are going to prepare the journal entry for these 3 transactions. So we start with the redemption of preference share. So I'm going to start with redemption of redeemable preference share. Okay, we have collect all the important information. Step number 1, we will record the shares that has been redeemed. Okay, remember, we only redeem 80% out of 1 million. So, 80% out of 1 million, just now we calculate 800,000 and then times with the value of the share to ringgit. So, the amount that we are going to redeem is 1.6 million. Credit to redemption of redeemable preference share account. Okay, and then the next step is you make the payment. So, how to make the payment? Debit back the RPS account and credit the bank. Therefore, at the end, the RPS account will be immediately closed because the payment has been made. Okay, this is step 1. This is step 2. Remember, we have the last step. where the Companies Act require the company to maintain back the shares redeemed. How to maintain back? There are three methods. Issuance of shares. Okay, you can issue either your OAC, PSC, or you can take from the profits. Okay, in this case, you are going to combine both methods. First, you are going to sell your shares first. How much shares to be issued? According to the additional information number 2, you are going to issue 1 million shares at 1 ringgit 30 cent. And this share is fully subscribed and paid for. So, 1 million unit, okay, times with what? How much?
1 ringgit 30
1
cent.
ringgit and 30 cent. 1 ringgit and 30 cent. So, you will get 1.3 million class. Okay. But in this suggested solution, okay, the preparer use the shortcut way. But for your level, remember, okay, I want you to maintain the what we call the normal but the normal journal entries that I have taught you before. So we will do step by step. First, to record the amount you receive, debit, bank, credit what class? OSA, 1,300,000. Okay. And then close the account, debit OSA and credit OSC. 1,300,000. Do you understand, class, what I mean by shortcut and the normal one?
Yes.
In this answer, suggested solution, okay, the preparer did not disclose the OSA account since OSA will be written off immediately at the end. So you only have the bank account and the OAC. But for your level, okay, I want you to show this way. Okay? Are you following me? Are you with me, class?
Yes.
Okay. Now, we haven't finished yet. Remember, the amount that we redeem is 1.6 million. But the amount that we replace only 1.3 million. Is it sufficient? Is it enough?
No.
No. So how much do we need to complete for the redemption? How much is the balance? How much is the balance, class?
300,000.
Very good. We need another 300,000 to ensure that the shares are fully replaced. So, according to Companies Act, okay, we can also use another method that is out of profit. You can actually refer to the question where it says that for the redemption purpose, besides than issuing shares, okay, the company will take the remaining shortage. Okay, here, the remaining shortage from the profits. So the remaining shortage will be financed out of profit. So what is the step? This is the step. Okay, debit retained profits, 300,000 and credit to ordinary share capital. So don't miss this part because you haven't fully replaced yet. So you have to take another 300,000 from the profit and transfer to OAC. So at the end, it will tie back to the shares that you redeem. That is 1.6 million. Okay, class. You understand? On the redemption of redeemable preference share?
Yes.
Okay, let us continue to the second transaction. So this is the second transaction, issuance of bonus share. Recall back what you have learned in chapter 2. Remember how to record bonus share? Bonus share is given for free of charge. Therefore, company will use their own reserve. According to the question, we already given that the company will use its retained profit. So you are going to calculate for the shares to be issued as bonus share. 1/10 times with 2 million unit times with RM1.25. So overall you have 250,000. Where do you take this amount? It's from the retained profits account. And transfer to where? Transfer to bonus issue. Finally, close bonus issue, transfer to ordinary share capital. Very simple and easy, yeah? Okay, last one. The last transaction here, we have share buyback. We are going to buy back our own share and then we have to split, okay, half of the share to be kept as a treasury shares and the balance to be cancelled immediately. Okay, class. So let us look together how to record this transaction. First thing first, you need to know how much shares that you purchase. Okay, according to the question, you are going to purchase 400,000, but for 50% is to be kept as treasury shares. So the first thing, you do the treasury shares method. Okay, this is the treasury shares method. How much? Nampak? You only take 50%. Half meaning 50%. So 50% out of 400 unit, you will get 200,000 unit times with RM1.60. Therefore, you will have 320,000. So the entry will be debit treasury shares, credit bank. Understand, class? You understand?
Yes.
Okay. Now, so we are going to record the balance by using cancellation method. Okay, please focus on the red color, the font with red color. I'm going to use this as the solution because as I mentioned to you, we have three different solution. We have two different method. If you are following the textbook, the Tan Leong Tong, we are going to use this method. And if you are using the study guide notes, which is taken from the what we call Tan Leong Tong, this is Jane Lazar. Sorry, this is from Jane Lazar. Okay, textbook. The author is Jane Lazar. And this one is study guide, but it's actually taken from textbook Tan Leong Tong. So we are using this suggested solution for the cancellation method. For the cancellation method. Okay, so the first thing, cancel the shares. How much the shares to be cancelled? The balance lah. How much the balance? Another 50%. So 50% times with 400,000, we got 200,000 unit times with RM1.60 equal back to 320. Kenapa sama 320? Sebab half. Because half. So that's why dia sama. Tapi kalau this portion is changed to 30%, so the value will be different. Okay, so debit OSC, credit purchase of one share. And then immediately close by make the payment. Debit purchase of one share, credit bank. Even though the account is closed later on, but don't do the shortcut way. Don't debit OSC and straight away credit bank. I want you to show me the what's called the normal way, the step by step method. Okay, remember according to Companies Act, if the companies buy back the share and cancel it, the company must ensure to maintain back the capital cancel. So how much the capital cancel here? 320,000. So the Companies Act require the company to maintain back the shares cancelled by taking the same amount from the retained profit, okay, and transferred to